we're going to talk about the ones that I like and the ones that I think are very applicable to the ES and the ones that you really should have on your chart. Okay. The whole point of this, you guys, trading futures, the whole point of this is to be a consistent trader, to get some daily income cooking, right? So we want to have a daily goal, a means to an end. We're not just willy-nilly trying to trade this thing bell to bell. I don't think that's a feasible venture, in my opinion. So what is the ES? Let's talk about that real quick. It is a little different than the NQ. The symbol on the ES for Thinkorswim is the \ES. That's the continuous contract. And, you know, there are continuous contracts on other platforms, but most other platforms require you to put in the actual specific contract that you're trading. So in this case, it would be the ESH24 or the ESH4 on Tradovate. But you get my point. Now, the reason that I use a continuous contract for the ES on all my charts is so I don't have to recreate my charts for every roll. Okay, and that's why when Thinkorswim rolls, I roll. It's important to note that the ES is valued at over twice per handle per contract than the NQ. So if you're used to trading the NQ, it's $20 a handle. It's $50 on the ES. That's a big difference. You're not going to ever, I would never want you to take 6 handles of risk on the ES. That doesn't make any sense at all. So you have to understand there's a ton of spillover from how I trade the NQ and how I look at the NQ and price action therein. But you have to respect that this thing is double the price, basically. It's all relative because it doesn't move like the NQ, but you need to be aware of that. Now, the reason that there is a lot of spillover between my levels on the NQ and the levels on the ES is because they are both priced in quarter increments, okay? So every handle, every point has 4 ticks, and that's why there's a ton of spillover. Another thing that's worth noting, if you are a Thinkorswim trader, they do not offer intraday margin. I think they used to at a 50% discount, which would be 50% of this 14,700 number. If you're at a futures only firm, they allow us to trade the E-mini S&P at $500 margin per contract intraday. You cannot take it home. You have to go home cash every single day. I prefer that. Personally, I don't want to take the thing home. I don't want overnight exposure. Now, the micro of the ES is the MES or MESH24. In this case, same tick value. However, everything is worth a tenth of what it is on the mini. So a perfect contract to use when learning how to, if you're expanding your skill set into the ES from the NQ or just getting started in futures, I would definitely start with the micros, okay? Now, again, the main appeal to trading the ES, and I'm sorry, I'm probably going to lose my voice by the end of this. The main appeal of trading any index future, specifically the ES in this session, is losing the overnight exposure, generating income during regular trading hours, okay? Again, I still feel like this is the best job in the world. Trading index futures allows us to focus on one product.